Good afternoon, everyone. Just wanted to give you a little live reporting as we are almost finished with this trading session today. And I wanted to highlight a couple of trades that I've taken, some modifications that I've done to my own system when there's multiple demand zones on different time frames and how I go ahead and play off of them. Don't mind the loud sounds of cars moving in Mexico City and a really cool cafe. But anyways, one of them is actually a trade that I just got into. It was UMAC. This one has been running for about a week now because there was an appointment of Donald Trump Jr. to the board, and it sent it flying all the way from down here up to 25. Now it's coming down, and I'm actually, because this is a trade that, it had its breakout on the 2nd, 2 days ago. It's now, gracias. It's now come back to a level. I was looking at this on different time frames, and I saw that there was this 4-hour demand for this big breakout over here, successive green candles. So I mapped out my zone. I kind of saw where I was bringing this level was matching where this 50 EMA line was. So I was like, okay, I want to take an entry over there. And then I see there's this support down here at 880s. So I have bid set up there, and then kind of bring it all the way down to 850, and I would stop out underneath there. So since this is, sometimes you'll see with these movers that have come from 25 bucks down to 9, and we're looking at the demand zone on a 4-hour time frame. This is going to be a much bigger range than usual. Typically, I like to see the demand zone be around 10%, and we're like just above that. So I have a really pretty small entry for what I feel comfortable with over here that I got in at 949. So it's doing okay so far. But this one's pretty much going to be a one-to-one trade for me. I'm looking at this level, this like 10.6 as resistance. And then that's kind of where I'm looking to sell out. So that would be like a $1.2 move. And really like $1.1 move from where I'm at. And then I would stop out just below, since I got in at 9.49. My stop is about $1 underneath there at like 847. And then I have my lower entries have higher numbers of shares. So that way, if I were to stop out my 880s, it would be right under 847. And I actually have that order. If it hits, again, it has to stay, this demand zone would have to move into here. Otherwise, I'm just taking whatever my entry is as it's come under and bounced over to the level that I'm trying to sell to. Because again, I want that first bounce. Second bounce is less probability. Sometimes it works, sometimes it doesn't. I see highest probability be in the first bounce. So that was a new trade for me. Definitely feel free to keep it on your watch list. The other one that I want to review earlier was actually a losing trade. And I think it's just as important, if not more important, to be reviewing the losers than the winners. And this one was CNEY. So this one's had a lot of volume today, over 156 million. And I mean, another thing too is the news wasn't particularly amazing. It came in after hours yesterday that CNEY receives NASDAQ minimum bid price requirement extension. But it did send the stock flying high. While this does say it's neutral news, if we look at pre-market, we can see just a lot of movement, stair-stepping, coming back down, still higher than previous highs, and then higher lows forming, and then a bounce over to 107. So I was watching this one. And initially, as I always recommend, I'm just going to delete everything initially. That I like to see what's available on the 15-minute time frame first, and then kind of look lower. So if I was to look at some demand zones here on the 15-minute chart, I'm just going to go ahead and draw these out here. I see this one here, but maybe I'd take it down to this wick, because that also kind of comes down to the wick of that red candle before. So that's a potential area. We're actually just starting to test that now. Then we can also see this area over here. See a lot of lines crossing here. So this is also a really good zone to take a look at. And sure enough, that did have a little bounce. Came to this level 68 cents, came up to 72. So that probably would have been about a 4.5%, 5% trade. Don't quote me on my math. And then, what was it? I know I was taking entries. I was looking actually a little bit lower because I didn't actually take this trade, but this was a potential zone. So this one is a little bit unclear to me because we don't have a breakout immediately here. And we have this red candle that actually it actually engulfs this green candle after. I want to look at this on some other time frames and see what I can come up with. Okay, so now I'm seeing on the 10-minute, this isn't even a proper demand zone for what I like to look at. Instead, what I see as a better demand zone is located over here on the 10-minute chart. I think this was kind of what I was getting at the trade that I ended up taking. And this one turned out to be a loser for me. Because I took it on the 10-minute, I saw it, and sure enough, it could have been a pretty solid trade, but it was because I was getting my entries higher up in the 63s, 62s, and then when it came down under 60 cents, I actually sold out of my position. I didn't like it under there, and that was also on me because I had a little bit too high of an entry, and I wasn't making most of my entries down in this level off of these wicks. If we look now, it would have been really nice and tight here between 61 cents and 58. So that was on me. But also, what I believe I found that was even better and got actually would have been a more impressive signal. So I looked at this on the 5-minute chart, and that honestly gives me a bit more confirmation than looking at it just again. Like we can see this 10-minute, but this 10-minute, this entire candle is up here if we were to use that, and that's what I was using. Whereas instead on the 5-minute, this candle is actually a lot smaller. And so we're constantly, if we want to get the most risk to reward, have to know how to shrink our areas of demand where we're looking for bounces off of and layer our entries accordingly. Because if I had started taking my entries between 61 and 58 cents, my average, say, probably would have been about 59 and a half. And then, well, again, it didn't hit the bottom right away. I would have probably had entries between 61 and 60 would have hit. This barely came below 59, but then we had this really nice candle up here. So it was just under a 10% move relatively quickly, and that's pretty much our bread and butter. So yeah, the entirety of that move would have been 10%, probably would have been about a 7 or 8% move. So just something to keep in mind. And then also for whatever time frame that you end up buying your entries on, one of the main reasons I have all these EMAs here is because they act as potential areas of resistance. So this would have been a great area to say, okay, cool, I have my entries. I'd be looking at the 65 cents as resistance where I want to sell. So that's 5 cents, give or take, a potential reward. So if I want to keep my risk nice and tight, maybe I just say I would stop out right below here. So like 60 cents is my entry, 50, just under 58 is my exit. So that's potential reward of 5 cents for a risk of 2 cents, making it a 2.5 to 1 trade. So that's amazing. Another way to look at this and how we can go ahead and set up our or look at resistance lines working really well is going to an example yesterday of CTNT. This is a beautiful trader. I did trade this one on the 15-minute. I was looking on different time frames and I saw we had all these wicks coming down here. So had a number of entries here, and then it even came down just around this 50 EMA and actually stuffed right below. I think my best entry was actually around 488, and then it just shot up from there. Now, I actually sold my position around like 519. This is about a 6.5% trade. But if we take a look here, we can see this 8 EMA acting as resistance here. But then right after, this 21 EMA also acting as a resistance point before it climbed back down. So really solid trades there. Even if you were just to take it, say from that EMA to here, it's 15% trade to the 8, and then a 20% trade to the 21. So just some things to consider, things I'm learning. But the time frame that you're leveraging your demand zone on, also you can use that for finding these areas of support and seeing how well they match to your targets. Because I mentioned, like, if you're ultra confident about the trade, holding for 5, 10%, 15%. If you're looking to secure quick wins in the beginning, maybe it's looking at a 3%. But always look at that reward in relation to how much you're willing to risk. So you can always be setting yourself up to have an edge. I hope all that helps. Let me know if you have any questions or have other charts you want me to review, and I'd be happy to take a look at it and make a future video.